And so with this market, this is your 2-bar reversal. So in fact, this is Thursday. So this happened on Thursday. And this would be pretty easy. If this is what we were talking about, this would be pretty easy. And I like this. The market does this and it only goes up. If I actually were watching it and doing a trade on it, I'd look at it and I say, this one thing only came up to a two. Let me do this because I always screw it up when I talk it. I'll just show you here and then we're going to go. We go to this, we open it up, and we look for a 382. The market went from here to here, and it couldn't quite get to the 382. And then it had a 2-bar reversal going lower. They had sellers doing this. The buyers could only go to here. They did retest this area, but then it did a 2-bar reversal. This is when you look for the market to go lower. And also, because the market's trading like this, you can turn this into um, um, A, B, C, and it gives you the target. So no, I didn't trade it, but that's the trade. And when it goes lower, it's coming down to buyers. So you have to see how the market trades. But it's coming. These are 2-bar reversals. Let me put the line in. This is the 2-bar reversal that drove it higher. The market came down to here to this level, and it came to a support resistance line. And because it had this kind of volatility to it, what did the market do? It came back to this area. You expect it. But because it's a volatile change and it's a tradable market, but it took a long time to get through all this stuff. It's hard. This is hard trading. When you see this, then a failure to make a new high here, and then it goes lower. This is the easy trading. The only problem with this, and this is for Moneybags, who still makes money if she doesn't do these trades, but you should be shorting these trades, and either one of them, and that's a big return. I'll put it here. So that's 60 points times $50 a point. And then you don't keep it. If you don't take your profits here, it goes back.